Good morning, analysts, bankers, investors, and all participants. Welcome to Thai Union Global Online Analyst Meeting for Q1 2020 result announcement. My name is Pimtip Phakthongpan and I am the MC for you today. Executive joining us today includes Mr. Thiraphong Chansiri, our President and CEO, Mr. Jörg Eile, our Group CFO, Mr. Banlang Vayanon, our Investor Relations Manager. As usual, our presentation is divided into 3 sessions. First, our key business highlight. Second, our financial performance. And third, our business outlook. There will be a Q&A session after the presentation. Please feel free to send us any question you may have via Facebook Live or Skype for Business chat. During the presentation, we would like to request your cooperation to mute your microphone. Without further ado, allow me to invite Khun Thiraphong to begin the presentation.
Thank you. Good morning, analysts and bankers. Thank you very much for joining us in this presentation via online. First, may I wish you all healthy and stay safe during this crisis. And I will walk you through the key highlights in this presentation, and then later we'll have Khun Jörg and Khun Banlang to walk you through the details. I'm very pleased to report to you all that our first quarter 2020, it's a very strong operation performance amid COVID-19 pandemic, but offset by weak non-operating items. Our sales at 31.1 billion baht, it's all-time high for first quarter in the last 3 years. The growth year-on-year, it's 5.9%. Excluding the forex. Gross profit increased by 15% and the margin at 16.2%. Our operating profit growth year on year, it's 49.9%. And net profit, it's down by 20% compared to the previous year. The net profit is at 1.016 billion baht. Second page, please. And our net debt to equity has been decreased slightly from 1.07 times down to 1.05 times. This page would show you the last 12 quarters development. And you can see that our first quarter sale, it's all-time high in the last 3 years with a high gross profit margin at 16.2%. Key highlights in the first quarter, we had mixed impact from COVID-19 with overall positive element in our operations. Thai Union has worked with its production facility and offices around the world to ensure our business continuity. Ambient business has shown very strong performance, but offset by slightly weak During this crisis, we have implemented cash preservation program to manage the COVID-19 effects. What we have done so far in the past quarter is that we have established a cash preservation team to regularly review with the business unit and regions via weekly call. We have reduced the capex by 25% across all business units. Procurement plan above $1 million must be reviewed weekly. Reduce SG&A expenses and overhead costs from minimized discretionary spending. And we have postponed all the advertising and marketing expenses. We emphasize on overdue control for receivables, maximize factoring, and ensure credit insurance policy are effective. We have put stringent control in our inventory to supply existing customer demand. Next. And these are all the activities that we have done so far in the past quarter. And it's mainly, basically, we have donated our product to the society in all countries that we operate, including China, US, France, Italy, and Thailand. Next. Before the crisis, we also have a demo day at the Space F to have all the first batch startup company to make the presentation to the corporates. And it was quite successful. And the company, Thai Union, has invested in quite a number of companies in this process. Next slide is addressing climate change and its impact on the world ocean. And this will be the new addition to our sea change policies. And in this quarter, Thai Union has become the first food producer and Thai-listed company to join EP 100, a global initiative on smarter and energy use. Thai Union has also joined an initiative, EP 100 Cool Challenge, which is looking to cool operation in the most energy efficient ways. Thai Union has also joined with Team Trees to have more than 7,222 trees planted around the globe. So these are all the initiatives in our Sea Change program. So I would now pass on to Kun Yok to walk you through our financial results in details. Thank you.
Okay, thank you, Thiraphong. Let me jump right into the key financial takeaways for Q1. Of course, the most noteworthy is the very strong top-line growth. This is since Q1 2017, the first time we've really expanded 6%. And if you look into the growth without FX, it's plus 7.6% year over year. Really great impact from the ambient business. And you will see a little bit later how the ambient business in Q1 has really shown substantial margin, but also top-line improvement. We see a little bit of weakness in the frozen business, and this will be the key theme during this presentation. Solid sales volume growth as well. So volumes have grown overall 6.7% year over year. Ambient volumes have grown nearly 25% in Q1, while the frozen and chilled business is more or less stable or flat, with a very small decline of only minus 1.1%. Gross profit 16.2%, a very strong advancement from a year ago, where we recorded 14.9% gross margin. All three segments, pet care, others, frozen, and also ambient, have expanded the gross margin, improved year over year. And as a result, our gross profit has grown 15% in absolute terms. We continue to have a cost control. Of course, we would love to have our SG&A below 11% again, and we are working on plans to get to something that is closer to 10.5%, where we see SG&A spending should be. But despite the strong top-line growth, we've been able to curtail SG&A spending to 4.4% year over year. And we will continue to learn through this crisis how can we improve our spending, especially our discretionary spending. As we can see, even in this opportunity, we can organize very effective meetings, conference calls, video chats, and exchanges in Teams, even when not traveling. Below operating profit, we had, of course, a much lower share of profit, primarily from our strategic investments, Red Lobster and Avanti, and we'll come to that a little bit later. We had FX losses from the weakening Thai baht. On the one hand, weakening Thai baht is very positive for us because Thailand becomes more competitive and can drive export volume more. On the other hand, this is then swinging back some of the FX gains we had over the last year. And from a very well improving profitability, especially in our European business, we have higher tax payments. Go to the next page. We update you typically on tuna prices, and we've added here in gray the comfort zone. I don't know if there's any comfort zone here anywhere, but this is the zone where we typically feel if tuna prices range somewhere between $1,300 and $1,700. The market moves easily. Everyone knows how to price. Everyone knows how to buy. In raw material inventories float on an average scale, so that's good. We have moved back into that range in Q1 with $1,442 per ton on average. This is a strong increase from the quarter before, and of course this helps a lot in the growing sales push to customers, that we can leverage here our good, attractive average inventory. Next page. A little bit deep dive on sales growth, 5.9% year over year, minus 5.3% from the prior quarter, which is seasonally very reasonable. If you look into more into details, ambient sales grew 16.2% with a volume growth of 25% as mentioned. We see a lot of customers and consumers buying and consuming a lot more ambient seafood. So this is not just pantry loading, what some people are saying. This is real increase in consumption. And we are also helping and communicating to consumers new recipes, better ways to consume and use our products. Next page. You can see that reflected in our revenue growth bridge that we have here on page 19. We've started a year ago at 29 billion in sales in Q1 19. We had a very strong growth in tuna, a very strong growth in sardine and mackerel, also in ambient salmon. We see a very, very good growth. So all the ambient businesses have grown considerably, but we see a slight contraction in shrimp. Of course, in lobster, this is not the season where people buy a lot of lobster. Other businesses are more or less contributing as planned, and this leads us to a 31.1 billion Thai baht revenue in Q1. So next page. The regional distribution has moved a little bit in favor of Europe and US again, and it's driven primarily from two things. One, the Thai baht is a bit weaker. US dollar and euro are a bit stronger, so compared to Q4 last year. So that helps in a translation effect, but we have the main growth contribution in ambient coming primarily from Europe and the US. So that's a very strong signal for those markets. The domestic Thai business is down a little bit, down by 10%. And that's clearly the result of lack of tourism from China, but now Thailand has a lockdown for a couple of weeks already, and we will see a lot of this happening in Q2. Of course, this has an effect on the revenue contribution from our domestic markets. The branded business has outgrown private label. which is not surprising because a lot of the sales push comes from our branded businesses in Europe and the US. So we have a little bit of a stronger margin contribution from brand, and this has helped stabilize our overall margin mix. And that brings us to page 21 in the margin mix. A good, strong 15% year-over-year margin growth to above 5 billion in the quarter from 4.4 billion a year ago. And it's the same story, right? It's stronger sales in ambient branded businesses, stronger contribution from being able to convert low raw material inventories into active businesses, and a flat to slightly contracting frozen businesses. Now, our facilities around the world continue to operate with good utilization rates. There are very stringent hygiene measures to offset any impact of declining sales. Now, selected factories may have some days where they need to clean facilities, where they need to protect their employees. But overall, if we look at the global capacity of Thai Union, we have massively expanded factory utilization, and we're really working on a much higher plant and equipment efficiency and utilization level. Next page. Our operating profit, as a result, has grown 50%. Good cost control, strong margin contribution from our businesses, focus on higher margin revenues. All this has well contributed. And this is a quarter where we are even recording a better operating profit than in Q4 19, even though we have a lower revenue. So really strong underlying operating performance in Q1 for our business. But of course, we also should not forget that in April and May, the COVID crisis still continues. There are businesses that are affected, especially the frozen business in Europe, in the US, sees contraction, and we will see some of this happening in Q2. So we need to see on balance how strong will be the ambient growth continuing to offset or maybe even overcompensate our frozen sales contraction. The next page. EBITDA is dropping, and this is where you now see the impact of course, our investments, our strategic investments in Red Lobster. We'll come to that in a minute. Q1 is typically a quarter where we get around $4 or $5 million in profit contribution, share of profit contribution from Red Lobster. This has turned into approximately a $3 million loss for Q1, and it's the result of all that's going on in the United States with lockdown and closure of dining halls. We also see a little bit of a contraction in our Avanti feeds business, which again is a result of price pressures in the market. Next page. We have a little bit weaker net profit, well, 20% weaker net profit compared to Q1 19, 4% weaker than Q4 19, but we are still well ahead of $1 billion. We have in this number taken a $5 million inventory provision from our US lobster and crab inventories. Lobster and crab prices have, of course, collapsed in the US, and we've taken a prudent step to reserve $5 million to protect us. I think this will last for a while, and we hope the economy in the US and also the exports to China will kickstart again and alleviate these risks. So we are ending the quarter with $1 billion in net income. That is a 3.3%, if I recall. Next page. We don't have any material adjustments, or actually no adjustments at all for this quarter, so 3.3% stays, 1 billion net income normalized or adjusted profit, and that's 9% below the normalized profit of Q1. We are in a very good and healthy net income position, even with all the risks that we see coming through our strategic investments. Earnings per share are 20 satang EPS in Q1, a little bit down from Q4 last year and down similarly from Q1 19 as a result of our net income decline. Before we come to the really good news around cash flow, where we are recording above 1 billion baht in nearly 1.1 billion baht in cash contribution. Let's quickly go to Red Lobster. Like I don't need to share with you that the F&B industry is very hard hit here in Thailand, in Europe, anywhere in the world. If you look at restaurants, F&B outlets, anywhere, most of them are closed. And this, of course, affects our business in the US with Red Lobster as well. All dining halls had to go to a lockdown. We had, however, 60% of the restaurants still open for takeaway and delivery. We had a 3 times growth of our off-premise business, and we have very strong weekly growth of our off-premise and takeaway business in the US. We have also massive cost savings executed from rent, G&A, marketing expenses that contribute to more than $8 million in weekly cost reductions. A great initiative by management to counteract any cash drains that we see in the business. We've implemented an attractive one-page menu, and it increases the attraction of Red Lobster for consumers. There's an everyday reason to visit, and if you see the engagement people show on our websites on ordering from Red Lobster, it's really amazing to see that even in such a crisis, things can happen, changes can happen so well to develop a new Red Lobster Reloaded program to come out of this crisis on the better side. So the team is fully energized and works along on a transformation agenda, and with the cash we have on our balance sheet in Red Lobster, we believe Red Lobster is one of those companies that will come out of this crisis well and be able to implement good transformation steps to return to profitable growth. If we go back to page 28, cash contribution, we have a cash conversion rate of 1.1 with a 1.1 billion in cash contribution. And this in a crisis situation where people are worried on accounts receivable collection and on cash preservation. So our cash preservation measures have helped us to really come out of this in Q1 with a very, very strong cash contribution. Our net debt bridge, strong EBITDA, a little bit of inventory build, a little bit of net working capital build. We continue the CapEx that we had planned, those that we really have to do to position us for the future. And we end with a 1.05 net debt to equity. We're now getting closer and closer in the range where we really feel very, very comfortable about our balance sheet. Maturity on Thai baht funding, we have expanded a little bit on short-term loan exposure. We have now a little bit above 20% of our debt is on short-term loans. And one of the reasons is that we have put in place a cash buffer to weather this crisis and to be prepared for any situation. We have around 2 to 2.5 times our fixed cost in available cash buffers, so we're really in a very strong financial position here. Next page. Return on equity has reduced a little bit. This is also because we have now more equity from the perpetual bond issue. Return on capital employed is around 8%. We need to improve our EBITDA, our EBIT a little bit more, so that's weighed down by the Red Lobster and Avanti Feeds equity income. Net working capital inventory days very stable, so we are managing the balance sheet here really well. And our net debt to EBITDA is now nearly back in the range of 4 to 4.5, where we want to be. And our net debt to equity is fully in the range of 1 to 1.1, which is where we want it to be. With this, I pass to Khun Best for the detailed segment reports.
For the key operating items, we have seen here the raw material price, especially on the tuna, are still operating within the range. As of April, the tuna price is at $1,400 per ton, which is practically in line with what we have been guided all along. I mean, at the tuna price range between $1,300 to $1,700 is a reasonable price level, and we can operate our business at ease, and our customer can know and buy that product appropriately. On the shrimp price has been pretty stable, both on year-on-year and quarter-on-quarter. However, the more luxury seafood type, like salmon, have seen some weakness recently due to the close down or city lockdown and the closure of a lot of food service outlets around the world. On the currency, we have seen that the Thai baht has recently been depreciating against all key currency. Thai baht is now, during April, closed at 32.6, which is reasonably weaker compared to around 30 baht to $1 in the beginning of the year. The pounds and euro are following the same trend. While on the other hand, I mean, if we compare to the year-on-year on the same period on the first quarter last year compared to the first quarter this year, we still see some baht appreciation, and that's why we are still seeing some of the FX impact on our revenue. Otherwise, our revenue growth could be actually even higher due to the volume sales growth. Nonetheless, we are still a firm believer that the baht depreciation should continue to enhance the competency of the exporter. By business segment, the ambient seafood are delivering a very solid growth. Volume growth-wise, growing at 25%, and sales value increased by 16%. The larger part is actually the branded product reporting over almost 20% growth year-on-year in terms of sales, and that is actually the key, one of the key driver push for our gross profit margin improvement that happened during the first quarter year 2020. The frozen seafood business have seen some of the impact from the closure, city lockdown, and some impact on the food service outlet. And as a result, we have seen some of the decline by quantity by 1% compared to the same period last year, and sales-wise down by 5%. Partly this is also due to the ASP, average selling price of the product, as the raw material price of the frozen business has been coming down. We are at least having some of the offset from the growth in the like of the Japan market or the retail business channel that are still doing robustly on the weak side from the food service business. The pet care is continuing to deliver a stable growth, sales growing at 3%, and the gross profit margin is continuing to deliver at a solid 25%. So this is continue to be our strong business operation, both sales-wise and margin-wise. Now we go to the geographic sales. Sales by geography, the US and Canada market are seeing a very strong growth. The sales are delivering growth at 8%. The ambient seafood, particularly under brand Chicken of the Sea, are delivering growth at 29% sales compared to the same period last year. And while the US frozen business has been impacted by the close down of food service, Our U.S. frozen business has been report a decline of about 4% compared to the same period last year. But in all, we are seeing a good growth from the U.S. market. On the European market, which is ambient seafood predominantly for Thai Union at least, are seeing a very strong growth. I mean, both all our branded product, whether John West, Petit Navire, Mali Blue, Ruggen Fish, and King Oscar are all deliver a very strong growth. And as a result, we have delivered a sales growth of 15% compared to the same period last year. On Thailand business, after reporting a very strong growth over the last few years, in mid-teens, we are now seeing a bit of a weakness during the first quarter in year 2020, sales down by 10%. This is mostly due to the drop and shutdown in food service business, which affect by the lower tourism activity into Thailand. So as a result, our sales been down by 10%. On the other market in the rest of the world, we have reported a decline, a small decline of 1%, while we've seen the China and Middle East market, which have been affected heavily by COVID-19 that led to the city shutdown. We, on the other hand, see a strong growth driven by the Japanese market and export to Japan market. So as a result, it was a mixed bag in that category. And as it turned out, the overall sales in the rest of the world outside our key market has been stable compared to the same period last year. So as a result, we have delivered first quarter sales of 31.1 billion Thai baht, and with the very strong gross profit margin of 16.2%, during the first quarter, we have delivered a gross profit of 5 billion Thai baht during the first quarter. And with that, I would like to pass on the stage to Khun Thiraphong to give us some guideline about what will be the outlook. Thank you.
Okay, thank you, Khun Bess. And for business outlook this year, I must say that so far I'm quite pleased with the results in first quarter. And not only that, I must say that I'm very, very pleased with the way our people has been operating under this crisis. Our focus for this year is still on cash preservation and try to manage our daily operations smoothly and try to seize all the opportunities that arise in the marketplace. So far, I think we can see now at least second quarter, we still see a strong performance on the ambient seafood. So I must say that at least for first half of the year, we should be safe from our business performance. If we look to the entire year, as you can say that the situation is quite fluid. We can at best try to follow the situation closely. If the countries open up, I may say that we may see a little slowdown on ambient, but we can see also the offset from a stronger frozen seafood once the food service channel are open up. So overall, I would say that 2020 should be a safe year for us. That's what I can share with you.
Now moving on to the Q&A session. Please send us the questions you may have via our Facebook Live or Skype for Business Chat. If you feel like sending us your question verbally, please feel free to unmute your microphone. Don't forget to state your name, your company, and the question you may have.
Well, at least there are two questions here now. Number one, what is the tuna price trend? The tuna price has peaked at 1,500 in May, and right now we see a softening fish price. Right now down to a 1,400 level due to a better catch. So that's the trend currently, as far as we can see. Second question regarding our U.S. operation, production facility in U.S. I must say that the capacity in fact has increased by 25%. Our U.S. operation usually run 4 days a week. currently they are running 5 days a week so far since March. They have a very strong result. They are running capacity at maximum right now. It looks like it's going to be a short meeting. York, you can say.
Look at some of the old questions. Down.
ลงมัน Another question is that can we say the negative impact from frozen business will be outweighed the ambient seafood? The answer is no. I think as you know, the ambient seafood, the main channel for ambient is retail. And during this crisis, the retail channel doing very strong. Whereas the frozen seafood segment, the channel is split half-half by retail and food service. The segment that's been impacted by the situation is the food service part. However, the retail channel, they're also selling very strong in our frozen business. So I would say that for frozen business, the impact would be around, top line would be around 20%. So I would say that it would not outweigh the ambient seafood sales. Can we expect similar growth trend in ambient seafood in second quarter as well as in the second half? I would say that yes, in second quarter, as we already seen that. But second half, I can't tell you right now. But I would say that when the countries open up, we may see some slowdown. But it's a matter of when the country would open. We don't know yet. What's the revenue trend that you've seen in second quarter by product segment? I would say that we will see a strong ambient seafood revenue growth in second quarter. As you may know, in the first quarter, the sale just increased significantly only in March. So at least we will see in full month in April, May, plus June. So that's the trend for our ambient. I think the frozen, we may see a more negative impact compared to the first quarter for the same reason, because the impact also happened in March during the first quarter. The pet care has been growing modestly, about 5%. So I think we will see a very stable pet care business throughout the whole year.
One of the questions is around our strategy with Red Lobster. Look, in a crisis, it's not the time to talk about leaving the deck. In a crisis, responsible managers and responsible investors like us need to stay beside management and be committed to management to get through the crisis. So our discussions are how do we get through this crisis and see a better business at the end of it. We believe there are good opportunities to get through this and get back to a cash positive situation and contribute to earnings sometimes in the future. So I think this is not the time to speculate. This is the time to improve the business operations as we have them. There's one question around the interest income that we get from Red Lobster. Of course, during this crisis, we're not taking cash out of the business. That would be very irresponsible. Yes, we've recorded this as a P&L item, and we will receive the cash once the company gets out of this. Look, in Red Lobster, you have to realize the F&B industry, like everywhere in the world, is heavily affected, and this is not ending end of March, right? This continues in April. In May, there will be an improvement. In June, there will be improvements, but we do have to expect that there are effects on us and on the share of profit contribution. The key focus here is how do we get through the crisis, and that's the majority of our work. Well, one thing I'm reading in many questions that are asked about Red Lobster, we do not have any convertible notes. We have preferred equity interest that can be converted into common equity, but this is not a convertible bond. These are very specific units in preferred equity, and that preferred equity carries a preferred dividend yield. That's what it is. So if we can have a separate session on that to explain more about the legal construct around this, but we do not have a convertible loan. Question around write-downs on Red Lobster. As you know, the Thai accounting board has stopped any requirements for companies to impair assets just because of a COVID impact. So the accounting board requests companies to look beyond COVID impacts and look into the longer term future. We believe the value of Red Lobster outweighs our investment, and we don't believe at this stage that there's any need to write down or impair any of the investments. We're very happy that the Thai accounting board made this decision. It's guiding us through this crisis, and not only us, but many, many other companies, of course, as well. There are a lot of questions around disclosing financial statements of Red Lobster. We're a minority investor. This is not something we can or would be allowed to do in any case. I'm sure Red Lobster will disclose their own financials as and when they have to. What we are disclosing here is, I guess, a very detailed structure of how Red Lobster affects our financial statements with share of profit, with income we get, with fees we get, with our cost of debt, with the interest expenses and the interest gains we can get from this. I think we have a very detailed disclosure around Red Lobster already. We will not start to disclose Red Lobster financial reports.
There is a question about M&A. I just want to make it clear that we remain our position that M&A is not our priority. Our focus is our business continuity this year. And we want to see the situation post-COVID, how the market look like. So I don't think we're going to have any M&A plan in the next few months. Well, also another question on the share buyback. Right now, we got approval from the board for this share buyback program. Everything is in place. We are ready to purchase the share if we see that it's unreasonably below the fair value. And regarding Red Lobster, I would like to say that Thai Union remain committed to our investment in Red Lobster. And in fact, during this crisis, we even work closely with the management team. We in fact even have a weekly call to follow up all the progress and all the strategies that they may have. So I want to assure you all that we still committed and we working with Red Lobster management closely, and we're now developing a plan and strategy for post-COVID crisis.
There's a question on what's the strategy to recover the operating performance of Red Lobster, and just a couple of key points on that. Look, the success in the off-premise business is a breakthrough. We will continue a massive off-premise home delivery and take out push for consumers to consume and be our guests also when they're at home. So off-premise will remain a major push. Second, what this crisis has shown us is that a simplified menu can first of all guide guests back to an everyday dining experience at Red Lobster. Not only an event, a birthday, or any other celebration, people come to Red Lobster, but we want to take this opportunity to make the menu simpler, make operations simpler, and get guests back on a daily basis. So everyday reason to come is a new direction. We are very happy that Red Lobster management has embraced this. I think the third part is the cost structure. Like in many companies, once they grow large, there may sometimes be cost structures that are excessive, and such a crisis also helps us to reflect. And there is a major initiative ongoing to structurally change cost levels in G&A and marketing, but also in the restaurants. And we're working very strongly on that. And these are a couple of key directions. And if we do those things right, there are real large benefits to be had. But at this stage, the focus is reopening restaurants. We will reopen in the coming 1 or 2 weeks, likely 50 to 100 restaurants. We have given yesterday the approval to open restaurants as and when state legislation allows dining halls to open, and when the restaurant manager feels he is able to manage the health and safety aspect. So some good points on strategic direction to make this a business that gets back to 120, 130, 150 million dollars in EBITDA.
I must say that we are very fortunate during this crisis that our core business remains strong, our free cash flow remains strong. And not only that, during this crisis, we are able to even expand consumers in our ambient seafood in all markets. So I do hope that post-COVID-19, Thai Union can emerge with even stronger company, as a stronger company and as a stronger business.
Right. So with there is no further question, both from the Skype and on the Facebook Live. We would like to thank you everyone for joining. Thank you for your kind participation. And should you have any further question, please feel free to reach us at our IR department anytime. Okay, and for now, we would like to adjourn for the session today. Thank you very much.